Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the continuation of the Bitcoin rally as we enter March, headed for potentially 70K and beyond, as the pundits are calling for 100K as they were a couple of years ago. We all know how that ended, but we'll see where the market goes from here. Can also take a look at what this means for US dollar and US rates and a bunch of asset classes that could be tied to this Bitcoin move and have historically been tied to moves in cryptocurrencies, but not the case here. It feels different for sure. And let's start with this price action in Bitcoin that's starting to feel different. You'll remember that the historic highs, all-time highs in Bitcoin, just shy of 70K, right now getting close to those highs and potentially looking at 70K in maybe the next couple trading days, given the most recent couple of months pace. As you can see here, throughout parts of January and February, this market has gone from 40 to 50 to now, like I say, challenging 70K, top 66 in recent trading. And depending on when you're looking, this market could be up or down a few $1,000s as volatility's up in this market. And just a quick point on that while we're here, Bitcoin, one of the rare upside skew markets. And what I mean by that is volatility tends to enter this market, historically at least, when the market's moving to the upside, whereas the stock market, for example, historically is the opposite, has downside option skew. Volatility tends to enter the stock market when it's moving to the downside. And so what that means is when crypto historically has moved higher, its tendency to witness large moves has also increased. And that's why, when this market was moving in the 20 to 30K range, you weren't maybe seeing such big days as now we're in this upper range and moving higher, at least for the time being, and you're seeing multi-$1,000 days. And so we'll see if 70K is next and this market challenges 100. Obviously, at this current volatility and at this current pace, 100K is absolutely in the realm of possibilities here this year. But on the flip side, that higher volatility can also go to the downside. And though 100K is in view right now, I think I saw the option market volatility around 100% in Bitcoin. That means that this market could theoretically, in the next 12 months, be cut in half. That's also on the table. And so we'll see where Bitcoin is headed. But what's been really interesting is looking at the other asset classes around this crypto move, because you might expect that, Bitcoin, especially Bitcoin priced in US dollar, which is what we were just looking at, is moving higher. And so the US dollar should be moving lower, not only as a function of the theoretical premise of all else equal. If Bitcoin is moving higher relative to USD, then USD is depreciating relative to Bitcoin and other assets, but also Bitcoin being a potential competitor to the US dollar, I guess you could say, would maybe mean that, more demand for Bitcoin, less demand for USD. We're not seeing either of those cases play out. As you can see here in the major pair dollar-yen, US dollar is right there near historic highs versus the yen. And those highs that they're near, that's 30-year highs for US dollar relative to yen. And so Bitcoin challenging all-time highs, dollar at 30-year highs for this pair. It seems kind of funky, right? And if you look at historical price action, which we'll look at here, you can see that this hasn't been the case. You've seen there in that red line large rallies in Bitcoin and lower prices for US dollar. And then, of course, you'll remember in 2022, when Bitcoin was crashing, US dollar was moving higher. And of course, the elephant in the room, or the middleman, so to speak, is what was happening at that time. Well, inflation was higher and interest rates were moving higher. And we'll talk about interest rates in a second. But either way, you can see that inverse relationship whereby big moves to the upside in Bitcoin saw some big moves to the downside, some weakness in USD, and then a big Bitcoin crash saw some dollar strength. And then as Bitcoin started to pick itself up in 2023 a little bit there, the dollar came off of its highs. But now, 2024, Bitcoin is back close to all-time highs, and US dollar hasn't really moved that far from its own highs. And we also have some correlations to confirm this fact, not only for Bitcoin relative to some of the US dollar pairs. As you see, we have Euro, Swiss franc, and Japanese yen. In that middle row there, if you're looking across, the last three are the correlations to those currencies. And you can see positive 0.23, positive 0.15, negative 0.11. Really small correlations. Correlation is a measure from -1 to +1. And you're not seeing real significant correlations to those other currencies. And also, if you look to the furthest left part of that row, you can see the correlation between Bitcoin and the S&P and Bitcoin and gold. Even lower correlations there. S&P at positive 0.13 and gold less than 0.1 correlation. So this is all to say that this crypto move, for the time being, this is a 3-month correlation, and this encapsulates a lot of the last 3 months of Bitcoin's run from 30, 40K to now beyond 60. Amid that run, hasn't really been so much of a correlation to these other asset classes. It's been doing it on its own. The price action in crypto has been kind of siloed off from the other asset classes, or at least, obviously everything is moving all the time, but one isn't really correlating to another. You're not seeing them move in the same direction or in opposite directions, which we just saw historically has not been the case. And the last piece that I want to hit home on, because we haven't talked about one asset class, we haven't talked about interest rates. And I alluded to the fact that in 2022, you saw significant downside in the crypto market, significant upside in the US dollar market. What was happening then? Well, US interest rates, and interest rates globally, but the US really led the way of major economies in interest rates to the upside. And that, whenever interest rates move higher, it obviously contracts the economy, and it can also put some pressure on a burgeoning new asset class like a cryptocurrency, because there's just going to be less cash, right? Higher interest rates, it's harder to access cash, and that likely is going to lead to lesser volume and lesser demand for what was, and still relatively is, depending on who you ask, a speculative asset like Bitcoin. And what's been interesting is interest rates, though they are lower than they were maybe 6 months ago, they haven't fallen, down to 0 or 1% where they were years ago prior to this recent run-up. They're holding in above 4%. And this most recent run in Bitcoin, up above 66K, close to 70, and maybe beyond 100, we'll see. But this most recent run here has coincided with the 10-year yield and U.S. rates across the board bouncing back a little bit on the same day. That is. Now, of course, this could change any minute, any day. But for the time being, U.S. dollar holding in, U.S. rates holding in, and Bitcoin able to get close to all-time highs, even with those assets staying strong. So, of course, these correlations can change. They likely will change. But for the time being, U.S. dollar and U.S. rates relatively unaffected by this Bitcoin move, and vice versa. Bitcoin's doing its own thing regardless of the dollar or rate environment.